Trading breakouts in the summertime is a very difficult thing because we tend to see a lot of false breakouts because we don't have people at their desks. Most of them are at the beach or similar places just relaxing, and that creates a bit of a problem. So, what can we do about it? Well, one thing is actually just not to trade as much, reduce your trade position. But if you are interested to trade and you want to keep on pushing, then we all know that stock market indices are rather bullish. And something we can focus on today would be the Japanese stock index. You can see here how this has different interpretations. It could be viewed as a big rectangle. Okay. It could also be viewed as the inverse head and shoulders with a head, left, and rather weak right shoulder. The important thing here, though, is that it's clearly broken out of here, either the rectangle or the inverse head and shoulders. And if we use this as head and shoulders or a rectangle, the target is the same. So it suggests this type of move. So why did we have this little push? Well, that little push appears to be on the back of the US-Japanese trade deal, and this is lifting this to the upside. Is it good? Is it bad? I'm not really sure. I don't really like tariffs in general. Don't really think the government is should get too much involved. But technically here, you have a big day, big boost, and then you have a bit of correction here. Okay. So how can we trade this? Well, we just revisited that breakout point. I think this would pretty much be sufficient to just be sort of bullish from current levels. And the general idea is this: as long as we trade above this line, and more importantly above this level here, then this should keep on being bullish. This, if we would go all the way up, which is a massive move, it's a 23% move, so I wouldn't get too excited, would suggest a risk reward ratio of 6.19. This could easily be reduced, something like this. You get a 2 times risk reward ratio. I think that could be better. And for all of you that are even better with the short-term trading, you might be able to find different ways of figuring out here where we can find the low. A final bit here, which I find interesting, is that many times like this, say if you would have bought here, then obviously you would have had an initial stop loss down here, but then as this market moved up, that stop loss can be reduced, right? That's another thing which is interesting, and that is that your initial stop loss is not your actual stop loss unless you never make changes to your stop loss orders. That's something that I do. For example, clearly when this one would go higher or break here, then it would make perfect sense to reduce the stop loss like that. And then you have what we call the post-trade average loss. And you also have the post-trade average win. And if you look at it from that perspective, even if we go to 43, which is a 5% slide gain, your reward ratio would be 3.85. So it's really important to keep an eye on that. And my general rule of thumb, if, for example, like the more exaggerated, like we did here, right? This one, which is 1.41. If we starting at 1.41, maybe 1.2, that's usually sufficient to get a very good outcome post-trade. Although from the initial bit, like if you look at from this bit, doesn't look too great, does it? You only make 2 times what you're losing here. That said, are you trading this or not? Do you think this little push has legs? If yes, let us know in the comment. If no, let us know as well.